Hello, good afternoon. It's Adil Fazal, market analyst at CFDs.com. Be sure to visit the website www.cfds.com and certainly explore the products and services available. And be sure to take advantage of the bonus offer as well of up to 25%. If you are interested, message me and I'll get that applied for you, or email me. Alternatively, be sure to visit the educational site as well, where I post my analysis and charts on a daily basis at www.cfds.education. Okay, let's try and assess the damage following this bloodbath that we've just witnessed overnight with the Shanghai, the Nikkei down almost 600 odd points, the Hang Seng down a whopping 750 points, but the Shanghai holding strong at only down minus 30 points. Okay, let's try and decipher exactly what's happening here. First of all, the Nikkei. Now, we will have to go to the weekly chart of the Nikkei, because you'll see that the Nikkei had this gap fill support, which I did mention, I think, in my video, but I didn't expect the markets to have closed that gap, given the fact that Mr. Abe or the Japanese officials started to indicate a bullish bias, and given the fact that obviously global equities are sold off quite substantially, then well, nevertheless, we've closed the gap, and that is a potential support zone, as you can see. Okay, and therefore one would argue from there you are looking at a potential bounce. Now, not only do you have gap fill support, you have previous resistance equal support. So this zone here is absolutely crucial, and based on this assumption, one would presume then basically that you are looking at a bounce in European equities as well. Okay. Now, looking at the Shanghai overnight, we are still holding double bottom. So again, that's a good sign. It's a bullish sign. Okay, and that should be interpreted as so. So therefore, you are looking for a potential thrust higher still. Okie dokie, right. So Asian markets potentially into support. In terms of the news flow, as we all know, oil prices still being ravaged. Okay, so let's just look at the price of oil here. You can see here a new low potentially being put in on the daily chart, and the market certainly seems to be going south very, very fast. Now, there is a argument here for a potential double bottom now at 28.5. So again, we will need to see whether or not we can hold this level after touching 29 and yesterday's high of 29.7. Or was it? Actually, it was 31. Yes, we had a high of 31. So again, that potential double bottom comes into play. Now, the important chart in this is the chart of Brent, because that seems to be dictating things in the European session. So if I bring up a chart of Brent, you can see the daily chart, lower lows, lower highs. The bear still in control, but we do have a potential here for a double bottom. So therefore, based on that, you would expect a rally on the chart of Brent. Okay, and that should obviously bode well for European equities, and should stem the sell-off as well. The chart of copper on a 60-minute chart, we haven't made lower lows, so again, that's a good sign, and you are building a potential base here as well. So again, from a commodities perspective, potential support. Bringing up the chart of the Aussie as well, because that's a good risk barometer. So if I bring up the chart of the Aussie, USD, you can see that you have an inverted head and shoulders formation on the 10-minute chart. 60-minute chart, you can see you're building a base, so that's certainly a good sign. A bullish engulfing candle, then consolidation. The Kiwi itself still has been under pressure given the weaker inflation data overnight, but having said that, the thrust higher has been sold off. So again, that certainly needs to be taken into consideration. In terms of economic data then, after having assessed the potential variables, the economic data this morning, the German inflation number actually came out worse than expected. So again, that should support the argument of further QE, so therefore looking at a weaker euro. Jobless data out of the UK stronger than expected, so again, that's a bullish signal, especially after Mr. Carney's dovish comments yesterday. That should be very interesting. In terms of the European current account, worse than expected. Mortgage applications, obviously, we have now, so it's building permits and housing starts basically is what the focus will be on. And again, that does indicate, given the market setup at present, that we are into a potential support zone here. Okay, now let's bring up the actual European indices. Let's see what the actual carnage or damage is thus far. Bringing up a weekly chart, the Euro stocks, you can see again that's into potential support. You have a gap fill zone here at 2868, and that is a crucial support zone. Now the Euro stocks is actually supported on the weekly charts with the S&P 350, obviously, as you can see there, into support, piercing the 200 MA. And then we have the stock 600 again on the weekly chart. You shall see that we are into 200 MA support. And obviously horizontal support too. So again, this is important. This zone is important. So therefore, you are looking for a bounce in European equities based on those two charts alone. Okay. Euro stocks on the 10-minute chart. We haven't made a lower low. We're consolidating here potentially for a bull flag scenario. Looking at the chart of German DAX, yes, we are holding the pivot lows now at this 9340, 9350 zone. So again, argument for a bullish bias. You have a downward sloping diagonal trend line. So again, that is expected to hold. You have an unfilled gap above. Unfilled gap is at 9660 region, and that's the gap that we are looking to potentially close on the upside. Okay, so very, very important to focus on that. 60-minute chart diagonal trend line, and obviously unfilled gaps above, and they will act as magnets to potentially close. Okay, cross-verify that with the MDAX. Again, the MDAX is into horizontal support, so we are looking at potential support here. We've obviously closed the gap now, which was a present, and that certainly will come into play. Cross-verifying that with the tech org share. Again, it's an inside bar thus far, and obviously given the fact that we've closed the gap, it's certainly expected to rally from here. Looking at the volatility index, French volatility index again is into resistance, so again that bodes well for European equities. V stocks, looking at the daily chart, you can see that we haven't made a higher high. If anything, it was closed the gap, and therefore one would argue for a bullish bias there too as well. Okay, so the French CAC on a weekly chart, you can see that you pass the 200 MA. That's a good sign, and you are into horizontal support. The daily chart itself, again, it's certainly remains vulnerable because it's broken the key support level. But nevertheless, given the fact that you have dovish commentary or dovish talk now with regards to the US refraining from raising interest rates, and again, that will be positive. You have this diagonal trend line on the French CAC, and that is expected to hold. 10-minute chart, we haven't made lower lows yet. If anything, it's a higher low, and therefore the bulls are in control with an unfilled gap above. The FTSE 100 now, the last chart, just to focus on this. Okay, so FTSE 100 on the daily chart certainly remains vulnerable. Obviously, after having plunged below the crease 58745, 575 level, or is it 5775? Yeah, 5775. Okay, so certainly not exactly a good sign. 60-minute chart, you have this diagonal trend line, so that will come into play, and then the 10-minute chart, you are looking at potential exhaustion and no real significant lower lows. Okay, so my summation or my expectation is we are looking to potentially bounce and move higher on European equities, given the fact that all bearish news has been baked into the cake. Okay, I wish you the best for the remainder of the day's trading. Keep safe, and always adhere to your stop loss. Goodbye now.